June 2026 was pegged with multiple events around 5th of June, where RBI decided to hold the interest rates. Sanjay Malhotra and the entire Monetary Policy Committee was under a lot of pressure to hike the interest rate because rupee, as we know, has been depreciating against US dollar for quite some time. He, however, decided to hold the rates, which we believe is a great policy decision. It's a pro-growth policy decision. And on the other side, what they ended up doing was they came up with lots of reforms on the debt side, making things very attractive for NRI Indians to invest in rupee debt, and especially removing taxation and also coming out with a scheme where NRIs can invest in FCNRB deposits, which yield as much as 6.5%. And RBI is also allowing leverage, which could potentially give yield of anywhere between 15% to 23%, where NRIs can take as much as 9 times leverage on their foreign currency deposit. Now, let's talk about the positive side of this entire policy decision. RBI will end up shoring as much as 50 billion US dollars to roughly about 100 odd US billion dollars, which will help improve our forex reserves, will also stem the rout which is happening in rupee as well. And rupee has already started strengthening. It has gone from 96 to 94 now. And this scheme is available until August or September, where we will see about $100 billion plus forex reserves being built by RBI. So that was a huge event in the early part of the June. The second big event, Kevin Warsh, who took over as a new Fed chairman in US, took over, and they had the first FOMC meeting around 17th of June, where they also decided to hold the interest rate. However, US inflation is running hot at this point in time. And what FOMC did was this ended up signaling that US is going to increase the interest rate twice for the rest of the year. And that signal was a little bit negative for the equity markets, where there was a lot of correction which happened in the tech stocks, specifically SaaS stocks. All the software and service stocks continued to correct. Even the AI momentum stocks and Max 7 stocks also corrected in the United States. So that was another big event that panned out in June. The biggest event of all for India was US and Iran signing peace deal, which was almost like a pressure valve, and the pressure valve getting released for India, because we were having multiple pressures coming in from things like oil energy supply was constrained. Oil prices were running as high as $95, which was resulting into a snowballing effect on the Indian economy, where inflation was expected to go higher, potentially also RBI becoming increasingly uncomfortable from an interest rate scenario as well, and also companies' margins coming under pressure. So immediately when the US-Iran peace deal got signed, we also crude going from $95 as much as down to $70 odd. And that's a huge relief for Indian economy on multiple different counts. And then as a result of which, you saw Indian equity markets rallying by more than 1,000 points. And that momentum still continues. The fourth largest event was, if you really look at bond yields in US have started spiking. So that's one area where people are now watching how the bond yields will look for the rest of the year. So now let's talk about what we are looking forward in the month of July. So July again is going to be our earnings season, where corporates both in India and US are going to release their results. We are expecting this earnings season to be not as great, primarily because out of this entire quarter, we had about roughly 2.5 months of war impacted scenario, which will lead to compression in margins and potentially also a little bit of degrowth in demand as well for multiple Indian corporates. So that's one thing that we are going to watch out for. The second biggest event that we are watching out for is how monsoon really pans out. And as we all know, we have an El Nino impact, which potentially the forecast is that we are going to have under average monsoon season. July and August are the peak monsoon months for India. And we are going to watch that event very closely to see what will be the impact on overall agriculture as a sector, and hence the food inflation, for example, potentially coming out of a deficient monsoon, if at all that pans out to be. And last but not the least, July from a seasonality standpoint, if you really look at equity markets in India, tends to be the best month for India when we look at last 20 years of data. So we are also going to see if this July, in July 26th, that seasonality is really going to play out as well. So those are the top 3 factors that we are going to watch out in the month of July. Stay tuned and keep following CrispIdea for more such insights.